Hi, this is Greg Bridges with Trading the Pips. So today I'm going to go over the stock exchange terms, definitions. There are a lot of people out there that don't understand what the stock market is, what stocks are, exchange traded funds, mutual funds, stock futures, stock options, and a host of other terms. But I'm only going to go through the ones that I just mentioned, right? So we're going to go ahead and start it off, and we're going to go over the stock market. The stock market is a place where shares of public listed companies are traded. The primary market is where companies float shares to the general public in an initial public offering, IPO, to raise capital. Thus, it is the meeting place of the stock buyers and sellers. So, what is it saying? It's pretty much saying that, hey, this company puts its shares of its company up on the stock market, and then you go in and you can buy and you can sell depending on the value. So we'll move to the next, stocks. A stock is a type of investment that represents an ownership share in a company. Investors buy stocks that they think will go up in value over time. If that happens, the company's stock increases in value as well. The stock can then be sold for a profit. So that's a general explanation of stocks. You can buy ownership in a company as it goes up in value. You can sell. You actually can sell if it goes down in value as well. The next one is ETF, which is exchange traded fund. So that's what ETF stands for. An exchange traded fund, or ETF, is an investment fund traded on stock exchanges, much like stocks. An ETF holds assets such as stocks, commodities, or bonds, and generally operates with an arbitrage mechanism designed to keep it trading close to its net asset value, although deviations can occasionally occur. So what does that mean? It means that most of the time the ETF will trade at close to what the value of all the stocks, commodities, or bonds that they have inside their fund, right? It will trade close to where their price is. Sometimes deviations will occur. Deviations means sometimes it will be higher, sometimes it will be lower. So as it goes higher, obviously you can make some money from it, and just go with that. So do I trade ETFs? Yes, I do trade ETFs as well. Not very often, but I do. Let's move on to mutual funds. Mutual fund. A mutual fund is a kind of investment that uses money from investors to invest in stocks, bonds, or other types of investments. A fund manager or portfolio manager decides how to invest the money, and for this, he is paid a fee, which comes from the money in the fund. Mutual funds are generally placed into one or four primary categories: equity, fixed income, money market, or hybrids, balanced. Equity funds are stocks or equivalents, while fixed income mutual funds are government treasurers or corporate bonds. So what are they saying? They're basically saying, hey, this is another fund that's been created, but it's managed by a fund manager or portfolio manager. And this person decides where your money is going to be invested. So they put it in whatever stocks, bonds, or whatever investment tool they feel free to put it in order to make monies for you, them, and the company in a whole. We'll move on to stock futures. Stock futures. A stock future is a contract to buy or sell a specific amount of stocks for a certain price on a set future date. Stock futures are the one way to hedge your investments so that no single market fluctuation, way up or way down, will ruin your portfolio. So, what does that mean? That basically means, hey, if I buy into the stock future, I can buy or sell at a future date. And they said basically you can hedge it. Hedge it means if you bought at some point, if you are selling at another point, if the company goes up, goes down in value, you can sell. So it basically, you have two ways to make money, and come out with a possible overhead, and be in the green, right? So you can possibly make some money from it. Stock options. A stock option is a contract between two parties in which a stock option buyer holder purchased the right, but not the obligation, to buy/sell 100 shares of an underlying stock at a predetermined price from/to the option seller writer within a fixed period of time. So I will tell you guys that I don't know much about option trading. I've only done a few future contracts as well. I really don't like dibbling dabbling inside stocks or futures. I like to just the stock futures or the stock options because I just like just to regularly trade stocks. So we'll just leave those definitions right there. Once again, stock options, stock futures, mutual funds, exchange traded funds, stocks, and stock market. Hopefully, this helped you guys out in understanding what the stock market is, what the stocks are, what exchange traded funds are, what mutual funds are, stock futures, and stock options. You guys have a great day. This is Greg Bridges with Trading the Pips. Bye.